From Deloitte Tax, welcome to the Tax News and Views podcast, where we talk to specialists from Deloitte about the latest business issues and developments. I'm Carrie Falkenhayn, your host for Tax News and Views, and today we are revisiting the topic of tax transparency as more organizations are focusing on this topic. Joining me today are Diana McCutcheon and Elise Kelly, both who are part of our tax governance and transparency team. Welcome, both of you, to the podcast. I look forward to this discussion. And Elise, I'll start with you. I hear you're seeing a renewed focus on tax transparency and governance by companies. So why is this happening?
Yeah, great question, Carrie. Thank you. First, global ESG standard setters really see tax as one of their topics of interest when it comes to ESG standards more broadly. In addition, government regulators are increasing their tax governance and transparency requirements. That's really because there's a renewed interest from multiple stakeholders in understanding a little bit more about a company's taxes. That could be investors and analysts, employees, or customers and communities where the businesses operate. Those stakeholders have a variety of tax knowledge and background, and so they're really looking to understand a little bit more about what a company is doing around tax. With this patchwork of increased requirements, companies are starting to rethink their tax disclosures more holistically, looking at what is being required to disclose and potentially pairing that with narrative to meet those complex stakeholders' needs.
So what are some of the regulatory changes that are impacting companies and how they think about this?
Yeah, great question. There are four key regulations that I really want to touch on today. One is public CBCR that's coming through in the EU as well as Australia. That's taking effect in the next few years. EU public CBCR is going to require publication of multiple different data points. That's going to include not only some tax data like income taxes paid and accumulated income tax, but also the nature of the company's activities, how many full-time employees they have, and all of this is on a country-by-country basis. So a lot of that information is going to be public if there are operations within Europe. The second key regulator is the FASB. They just passed on the 30th of August increased tax reporting requirements. And that's going to be more detailed rate reconciliation items as well as taxes paid by jurisdiction. The third regulation I want to talk about is Dodd-Frank, Section 1504. That is exclusively for clients in the extractive sector. So that's going to cover oil and gas, mining and minerals companies. And they're going to be payments to governments at a project level related to those oil and gas and mining and minerals projects. That's going to include not only taxes, but other things like royalties and fees, anything that would be a payment to government. And that is going to be due September 2024. So that regulation is really upcoming within the next year. And then the fourth one is the new climate change disclosure regulations in California and Europe with the CSRD. Well, that's focused on financial transition risk for climate change. Tax is going to come into play there if there's credits and incentives or carbon taxes that might apply with regard to their financial transition risk with climate.
So you touched on it before, but maybe go a little deeper on this connection between tax as a factor in corporate responsibility and why these tax metrics are getting included in ESG and sustainability reports.
Yeah, tax is definitely a material aspect in ESG and sustainability. First, it's widely understood to be a mechanism for funding the United Nations Sustainable Development Goals. So an example of that might be the goal number 4, which is quality education. Of course, taxes go in to fund that in most countries. So that's where one way it comes into play. Another is in total tax contribution. That's really seen in ESG reports to emphasize the company's economic impact. That can include taxes borne and also taxes collected on behalf of other payment providers, just income taxes. And then finally, taxes really touch on that G of ESG, that governance piece. So it's going to be on policies such as local compliance, maybe lobbying efforts they are doing, interaction with taxing authorities, and just making sure all of their governance is squared away and potentially they have board approval of some of their tax policies. So that's really what comes in that governance play as well.
Got it. Diana, are you seeing other drivers that might influence a company to disclose more around tax?
Yeah, no, that's a great question. There's a lot of pressure right now being put on tax departments. And as Elise mentioned, we've got public country by country reporting. And just putting those numbers out there without some context really provides an opportunity for companies to think about their narrative. What information can they supplement with those numbers that kind of helps tell a better picture of who they are as a taxpayer? There's a number of institutional investors that are also pushing for more transparency. There have been some shareholder votes in the last year or so, trying to get companies to adopt what's called GRI 207, which is one of the leading ESG standards. And there are some very specific tax standards related to country by country reporting and some of the governance practices of a company as well. ESG ratings agencies, they look at a company's level of transparency when they're putting together some of their scores. They also have a heavy factor on governance and kind of what's out there as well. And then the last one is kind of what I'll call peer pressure. We're seeing some companies that are publishing more and more tax data, whether it's in a specific tax transparency report or they're including something in their ESG or sustainability report. And so some companies have got their eyes out. If a bigger competitor or another company they view as peer starts to publish more, then they're thinking about, their ability and readiness to report as well.
It sounds like it would be a heavy lift for an organization to be able to report transparently on all of the tax contributions that they make. What are some of the key ways companies are preparing for these additional reporting requirements?
I call it disclosure readiness, but really what it is it's data readiness. A lot of companies are having to assess, where are they getting their data? Who owns it? How many different systems is it coming from? These are things that they can actually do in conjunction with their Pillar 2 analysis and getting ready for this public country by country reporting. So really thinking through the data. And then once you have the data, what is the story that it tells are things that companies are doing. Some of the pitfalls, there's just the data quality. There's the availability of that data. Taxes collected might be a little bit more difficult than, say, a tax that's directly on a tax provision or aligned within the financial statements. And then we suspect and we've seen that there are a lot of different reconciliations that will need to be done because of all these different places that this information could be showing up, making sure it reconciles back to the financial statements and what's being reported, on country by country reconciles to Pillar 2 type information as well. So reconciling seems to be a heavy lift as well.
So lots to do around data, but Elise also mentioned governance, right? The G and ESG. What are companies doing around governance for tax right now?
Yeah, so governance, as you point out, is the G and ESG, and is really, really important when companies kind of think through what does their tax governance look like. We talked about Australia and their country by country reporting that's coming out in the next couple of years. In addition to the numbers, they actually do want to have information on a company's tax policy. One of the leading practices is to have that policy reviewed by the board. And so this is a really great way for companies to kind of refresh, make sure that it applies not just to a country specific, but as a global policy. Some companies might be used to publishing, in the UK and Poland, they also have similar requirements. So in addition to numbers, tax policy is important, but also thinking through your tax risk framework. Is it something that is easy to understand? Is it truly managing those tax risks that might come up? So really kind of doing a refresh on governance and the different practices within the company, making sure that, not just the tax department, but some of the other kind of non-tax functions within the business understand what those controls are and what their role might be within that tax risk framework is a really great way to start. So kind of just doing a refresh on governance is great for companies to think about.
Right. What else should companies do now to be ready in this changing environment?
Yes, thanks, Carrie. And Diana had mentioned the data and governance piece. Those are huge. Other ways that they can get ready is really making sure that the tax and the ESG leaders are on the same page. Tax should contact ESG and understand and make sure they're aligned with what the company's ESG strategy is, as well as the ESG leaders should understand how tax comes into play and what the tax team is doing to really meet all of the needs that Diana and I had talked about previously. Companies should also consider what is their tax narrative now for both them and their peers, and how is the market moving on reporting on this. So ways they can do that is analyzing and understanding current tax and ESG reporting that's available now. That might include what messaging there is in the 10K. There might be some risk areas there around tax that are talked about. And it's something that, if you consider the list of stakeholders we talked about before, what would a non-tax technical person have questions on that in that 10K? What may cause them some questions for those stakeholders? What is the opportunity to weave tax into that ESG report and frame some of those tax issues with maybe a different audience in mind with some of these other reportings available? ESG ratings and risk. Where are your ratings as a company and where do you want to be? Where can better tax and transparency and governance really improve those ratings? And then also looking at media and social media. What is the media focusing on around tax for both your individual company and your sector? And then also making sure your hand is on the pulse for what those reporting requirements are. I had talked about quite a few of the new ones coming out, but what else are you seeing, and making sure that you're really prepared for when those do come out and those reportings are required. You should consider this both from an external messaging point, as we discussed with different stakeholders, but both internally as well. Does your business understand what's going on with tax? Does your board understand what's going on with tax as well? We're seeing companies prepare some internal reports, maybe a tax crib sheet note that's a couple pages long as a first step on their disclosure journey, really to make sure that tax messaging is sound if team members at their company are to get questions on that. And then again, just make sure you're monitoring that changing environment and peers to make sure your company's up to speed on what tax disclosures make sense for you and what's going on in your industry.
Well, thank you both. Lots of interesting information, and this area continues to evolve. I'm sure it will continue to evolve, so we may get the chance to talk again in the future. But in the meantime, if our audience wants more information, just go to Deloitte.com and search on tax and sustainability. You could also reach out to Elise or Diana via LinkedIn, and always continue to tune in here for the next edition. Thank you all so much for listening, and I hope everyone continues to be well. Take care, everyone.